Hello everyone, and welcome back to the channel. This is Fair Value Finder, and today we're taking a look at stocks who rose their dividends in the month of July. Because with market close today, the month of July is over, and these are the companies that decided that they wanted to reward their shareholders by raising the portion of their profit give out. So if you're not familiar with how I do this, last month we took a look at all of the companies, and then we take a look at the percent that they rose it, their payout ratio, and then I added a bit more about how this affects their valuation. So for the percent raise, we're looking for something that's at least 2%. If it's below 2%, it's not keeping up with the Fed's inflation targets, and therefore is actually declining on an annual basis because the value of the dollar. It's yellow if it's 2 to 5%. Like, yes, that's okay, but we'd really like to see something at least 5%. And then it's green anywhere above there. Payout ratio, we'd really like to see it in the 30 to 50 range, where they're paying out a decent portion of those profits, but it's not going to slow down the growth of the company. So we'll start with everything that I have highlighted in green. They are good on both their raise percentage and their payout ratio. Marsh & McLennan Companies, Inc., MMC, 20.34% raise, 43.4% payout ratio. So their old dividend was $2.36. Now they're paying $2.84, 48-cent raise. Very nice. Their new yield is 1.51%. So it's nothing massive, especially for a stock that trades for $188. They seem to have a really high PE too. So just based on the metrics I'm seeing here, it looks like they're probably pretty overvalued. But that helps to raise up at least the dividend portion of their valuation of $5. None of these stocks we've taken a look at yet. So if we were to have, I would have put the fair value over here so we could actually see the impact, but nothing this month. Next up is Joe with a 20% raise, 1/3 of the profits being paid out. They have a yield of 0.76, 63.5 share price, and a 44 PE ratio. So that's another one that looks like it's pretty overvalued based on all these numbers. Wells Fargo, 16.67 raise, 34.2 payout for a 3% yield and a $46 price. This looks like a good dividend stock. On a dividend basis, this is the kind of thing that we would be looking to buy. And I think I had mentioned last time where if you truly trust the management, then as a dividend investor, this is the really majority of the data that you need to know, because you'd be trusting that they're growing their revenues enough, that or buy back shares, both of which are good for the shareholder. Then we have BSET with a 12.5% raise and a 36.2% payout ratio, 4.09% yield, $17.60. By all metrics here, this one looks like it's pretty good. So in fact, it's probably one that I'm going to take a look at and see what's going on, because I like all those numbers that I'm seeing there. And this is what I use to help find some dividend potential. I recently created a portfolio to go along with the 3 portfolios called Dividends, where I'll be taking the good dividend stock raisers every month. So from this list, we'd probably be looking at adding some Wells Fargo and some BSET, Goldman Sachs. Goldman Sachs would make the list. ATR, I don't think would make the list. They have a very low starting yield and a very high PE. And then Cummins would be, we could probably add Cummins as well. I'd say that they kind of teeter. I mean, it's only a 7% raise. They only pay out a little over 2.5%, and they're almost halfway on the payout ratio. So they're pushing boundaries on the payout ratio. I'd like to see them at least 3% on the starting yield, and I'd like to see this in double digits, but they are decent. And we can look at who has the highest payout ratio, who's at risk of having to cut this in the future, and who has the most room to grow. So all of these zeros means that it's not finding a PE ratio for those stocks. So they could be unprofitable, which would be very concerning. So to start off the bat, those would be companies that I would be worried about. Kellogg Company comes in with the highest payout ratio, 99.5%. They came in with a 1.69% raise, where they rose at 4 cents, so 1 cent per quarter. And that is just the typical raise that you see for some stocks who want to keep up their track record of raises but cannot sustain it. Exactly this situation would be starting to run into trouble, where you might be looking at a yield trap and see that cut from under you in the coming years. ConAgra Brands with a 6% raise, again paying 99%. They came in with a decent raise, but they are very high on that payout ratio. So it could be this is last year's earnings per share. So it could be that there was some sort of acquisition or some sort of accounting explanation for this. So we can dig deeper and see why this is at a 99%. But that yield does look a little high, where there's probably something going wrong elsewhere in the company earnings or balance sheet that the market is starting to pull away from it. I feel like the sweet spot for dividends is somewhere in the 3% range. But right now, I just got notifications about my interest rates on my accounts raising up to north of 5%. And then things that have basically a definite no, very low raise, very high payout ratio. We've got Duke Energy and Mondelez International. Anything from there up, I would be concerned about. JM Smucker is just kind of on the fence. It's kind of low on their raise, kind of high on their payout ratio. So that's one to keep an eye on. I know that it was talked about as a good dividend stock back over a year ago when I was looking at it. But today it's not that great. I'd really would prefer something within this range here. In fact, they all kind of grouped themselves together right there when we look at the payout ratios. But that's all for this one. Thank you guys for watching. Hopefully you enjoy some nice dividend raises from this bunch. Nothing affects me here, but hopefully at least the ones that are green do affect you. Please like if you enjoyed the video. Comment what your favorite dividend stock is, and maybe we can do a deep dive into that, and I will catch you next time.